Your finger is hovering over the buy button. Gold just broke through resistance, volume is spiking, everything looks perfect. Then a thought creeps in. What if this is a fake breakout? You hesitate. The price runs another 10 pips. Now you're panicking that you're missing the move. You slam the entry button at a worse price, immediately feel regret, and spend the next hour second guessing everything. Or flip it around, you see a mediocre setup. No, it doesn't quite meet your criteria, but you've been waiting 3 days for action, and you're bored out of your mind. You take it anyway, justifying it with, it's close enough. The trade fails and you knew it would before you even entered. These mental traps happen in the seconds before you click that button, and they're destroying more accounts than bad strategies ever could. What I'm about to reveal are the 3 invisible thoughts that sabotage your entries before they even start, and the exact mental techniques to catch yourself before you make mistakes you'll regret 5 minutes later. The death spiral. You're about to enter a trade that meets every criterion on your checklist. Then your brain starts playing the highlight reel of every trade that looked perfect but failed. What if support breaks this time? What if the news causes a reversal? What if I'm missing something obvious? These questions feel like due diligence, but they're actually fear disguised as analysis. You're not evaluating the trade anymore. You're looking for reasons to talk yourself out of it. This death spiral works like this. You spot a valid setup, then immediately start imagining all the ways it could fail. Each what if triggers another what if until you've constructed an entire scenario where this trade is doomed. Meanwhile, the actual trade is moving without you, and now you're watching your setup work perfectly while you sat paralyzed by hypothetical disasters that never happened. The cruel irony is that this overthinking makes you enter at worse times. You skip the good entry while you're spiraling, then enter later when FOMO overrides your fear. You end up taking the same trade at a worse price with worse conviction. Your fear of being wrong didn't protect you, it just made you wrong in a more expensive way. Here's the instant cure that sounds too simple but works. Create a point of no return rule. The moment your setup checklist is complete, you have 10 seconds to enter, or you're not allowed to take that trade at all. Not 10 minutes. 10 seconds. This kills the death spiral before it starts because you don't have time to imagine all the disaster scenarios. Your setup either meets your criteria or it doesn't. If it does, you enter before your fear brain can wake up. Second technique, write down the 3 most common what-ifs that stop you from entering valid trades. For example, what if it reverses after I enter? What if this is a trap? What if I'm reading this wrong? Now write a standard response to each one that you read before every trading session. Something like, reversals are normal and my stop handles them, or my checklist accounts for traps. When the what if appears, you have a pre-written answer that short-circuits the spiral. Third method, track your skipped winners for 2 weeks. Every time you identify a valid setup but don't take it because of what if thoughts, mark it in your journal and track what happens. You'll discover something painful. The trades you skip from fear work out more often than the trades you take from FOMO. This data proves your fear is costing you money, making it easier to override next time. The boredom entry trap. You've been watching charts for 2 hours and nothing's happening. Your euro-dollar setup hasn't triggered. British pound is chopping sideways. Gold is dead. You're getting antsy. You check social media and see other traders posting wins. The psychological pressure builds. You start looking at currency pairs you don't normally trade. You notice a kind of okay setup on Australian dollar. It doesn't really meet your rules, but you've been sitting here forever and you need something to trade. This is the boredom trap, and it's insidious because it doesn't feel like fear or greed. It feels like opportunity recognition. Your brain is convincing you that this marginal setup is worth taking because doing something feels better than doing nothing. The problem is you're not trading your edge anymore. You're trading your emotional need for activity. The boredom entry has a specific feeling signature. You're trying to convince yourself the trade is good even as you're entering it. You're adding qualifications like, this could work if, or it's not perfect, but. These mental negotiations are red flags that you're about to do something stupid, but you ignore them because the itch to trade is stronger than your discipline. Kill boredom entries with a minimum wait rule. Before you can enter any trade, You must wait 5 full minutes from the moment you first spot it. Set a timer. During those 5 minutes, you're not allowed to analyze it further or talk yourself into it. You just wait. This delay kills 90% of boredom trades because by minute 3, you realize it was never a real setup. You were just bored. Second strategy, create a boredom playlist of non-trading activities you do the moment you notice yourself hunting for trades. Maybe it's 10 push-ups, a walk around the block, or checking actual work emails. The activity doesn't matter. What matters is you physically step away from charts when you feel the boredom itch. When you come back 5 minutes later, the marginal setup that looked tempting will look like the garbage it always was. Third technique, set a hard rule that you can only trade currency pairs or instruments on a pre-written list. If it's not on the list, you can't trade it no matter how good it looks. This prevents boredom from making you explore random markets where you have no edge. You might get bored watching euro-dollar do nothing, but at least you won't blow your account on a random setup in a market you don't understand. The FOMO trap. You're watching British pound consolidate. It's not quite at your entry level yet. Then you check your trading group chat and see 5 people posting entries. Just entered long on pound, looks ready to break. Your stomach tightens. What if they're seeing something you're missing? What if you wait for your level and the train leaves without you? What if you're being too cautious and missing the move everyone else is catching? This FOMO trap is different from the others because it's triggered by social proof instead of internal pressure. Your brain is using other people's actions as evidence that you should act, even though you have no idea if their setups match yours, if their risk tolerance matches yours, or if they're even following a real system. You're letting strangers' decisions override your own analysis. The trap gets worse when you see people posting profits from trades you didn't take. Now it's not just FOMO about missing the entry, it's FOMO about missing the profits. Your brain starts calculating how much you could have made if you just entered when they did. This backward-looking FOMO is even more dangerous because it makes you chase trades that have already moved, trying to catch something that's already gone. Here's the hard truth. You will miss trades that other people profit from. This is guaranteed and unavoidable. Even if you have the same system as someone else, you might be away from your screen when the setup triggers. You might be in a different time zone. Your setup might have one additional filter that theirs doesn't. Accepting that you'll miss moves is the price of having a systematic approach. Block out the noise with a social blackout rule during trading hours. No Discord, no Telegram, no Twitter, no checking what other traders are doing until your trading session is complete. If you can't resist checking, delete the apps from your phone during market hours and only reinstall them after you're done. This sounds extreme, but FOMO entries cost you way more than missing occasional social updates. Second technique, create a FOMO response script. You read when you feel the pull. Write it down now. Other traders have different systems, different risk levels, and different goals. Their entries have nothing to do with my edge. I trust my system and take only my setups. Keep this visible and read it every time you're tempted to follow someone else's trade announcement. Third strategy, track FOMO entries separately in your journal. Every time you enter because of what others are doing rather than your own system, mark it with a special tag. After 2 weeks, calculate your win rate and profit factor on FOMO entries versus system entries. The data will be brutal. Your FOMO trades will perform significantly worse than your system trades, giving you concrete evidence that following others is costing you money.